Welcome to another cover note from Insurance Europe. These are short webinars covering topics and issues of importance to the European insurance industry. Today's title of the cover note is Putting Sustainability Ambitions into Practice. My name is Olav Jones. I'm Deputy Director General at Insurance Europe, and today I'm joined by Gilke Eeckhoudt, Chief Development and Sustainability Officer at Ageas Insurance Group, and Wim Vermeir, Chief Investment Officer at Ageas. Sustainability is a topic of huge importance to everyone. Climate is one aspect of this, but there are others too, not least nature-related sustainability and diversity. The insurance industry has always had a long-term perspective, and it's an industry which is very involved in the challenges and risks faced by our customers, both individuals and businesses. And we're also very exposed directly to the impact of weather changes. So naturally, sustainability is a major topic of an area of activity for insurers. In this cover note, we will focus in particular on the climate side of sustainability. I will discuss with Gilke and Wim the Ageas's sustainability ambitions, some of the actions the group is taking, and the challenges they face to support climate transition. Gilke and Wim, welcome to today's cover note. Gilke, could I start with you and ask you to give an introduction to Ageas Group and also its sustainability ambitions?
Yeah, so Ageas is a mid-sized European insurance group active in life insurance, non-life insurance and health insurance in 14 countries. And what makes the group quite different is the fact that we are split in our business over Europe and Asia, so mature markets and growth markets, and also that we operate in the local market with top local players who we help outperform in their market. Now, when it comes to our sustainability commitments, it's important, I think, to say that this year, in 2024, we will exist 200 years, so our roots go back to 1824. And if you look at the role of the group over those 200 years, it's always been to help stimulate progress in society and protect welfare. And over those 200 years, the role hasn't changed. What has changed is the challenges over time, and still today they are different market by market to some extent. And already many years ago, we decided that we wanted to be a stakeholder-driven company and not a shareholder-driven company, meaning that customers, employees, society, partners, and shareholders should be at an equal level in our decision-making. And in 2021, we really made this tangible by setting not only financial targets, who mainly serve investors, but also setting non-financial targets, and on which we report internally and externally, and which we also do in our multi-year budget exercise, both for the financial and the non-financial side.
Thank you. In terms of the ambitions to do with sustainability, you made it clear that a lot of that's coming internally from a management decision. Mm-hmm. But are you also experiencing the pressure from shareholders, from customers, from employees, from regulation, and from those driving a change for sustainability?
Mm-hmm. Well, sadly enough, I would say on investor side, we don't feel a lot of pressure in the sense that they consider sustainability more as a hygiene factor. So they look at the rating, and if the ESG rating is okay, it's fine, and you only get penalized, in fact, if your rating is no good. I would say for the regulator, what has been really helpful is that the regulator puts the cost of nature, the cost of society into the equation. But this can't be just an accounting exercise. It really needs to drive management decisions. And so I would say more work to be done there. And also, I think in terms of by regulation, we have created a level playing field within Europe. And with that, I mean also it helps us within Europe, but it does not necessarily help companies who are based in Europe, but operate globally, in the sense that we impose the same rules out of Europe to all the geographies where we operate, where local situations can be different. For example, we operate in India. Although we all want to motivate employees to commute to work by public transport, in India, public transport is by train, generated electricity through coal. So commuting by train to work is actually very penalizing, but there is no alternative. And yet in our European regulations, we have to take that into account as if it was a Belgian reality. So also there, I think more customizing to local geographies is important, especially when you go across outside of Europe. And then more looking on the internal part, I would say, and to my great pleasure, in looking at employee, senior management, board, I feel like there's no longer a debate that ESG should be by design in all the decisions that we take, and I think it really is. If there is any debate, it's on how to implement it, and sometimes the trade-offs that you have to make between environmental choices, social choices, or other kinds of trade-offs, because there is no magic solution or no magic bullet.
Mm-hmm. And Wim, are you finding that customers are particularly interested on the investment side?
Yes, indeed. I think that from the investment side, sustainability makes sense. It's a way of looking at companies with a more holistic view, with a longer longer-term view, if you take into account the ESG factors. And so it's logic, I think, for us as investor, but we see that our clients are having the same approach. So if you look at what's the market share of really very dark green sustainability funds, so funds with the label Article 9, we're coming from 15% 3 years ago, and now it's 24%. That is a big increase. We see that in our largest channel, it's a bank channel. We see now that, and they did a poll with our clients, that 80% of the clients are interested in sustainable solutions, sustainable investment solutions, and actually 75% of the production this year was in sustainable funds. The only, I would say, necessary condition is that there is a performance as well. So performance needs to be in line or closely aligned with traditional investments. So if you can combine sustainability with performance, you have a winning combination.
Okay. Now, maybe turning concretely to actually the sustainability actions and plans you have in place. Of course, sustainability covers a wide range of activities within a group like yours. There is, to start with, the internal aspect of what you're doing, you're producing yourself in terms of emissions and impact. Then there's the underwriting side, and then there's the investment side. So maybe we can tackle all of those, each of those in turn. So Gilke, in terms of the insurance, Ageas' own operations, although they may not be so large in the scheme of things, what are you doing to make sure Ageas' own impact is limited and reducing?
Mm-hmm. So I'm very much agreed with what you say. So looking at the insurance industry, you see that the carbon footprint of our investments and the activities that we underwrite is much higher than our own operations. This, of course, doesn't mean we should do nothing. And if we look at our measurements, so we take 2019 as a base year, because that was the last year before the pandemic, and we have set ourselves a target to reduce our carbon footprint of our own operations by 40% by end of this year. It's an ambition. We aim for this, and I think by measuring, by setting a target or an ambition, and also by putting it in the variable remuneration of our managers, you really accelerate decision-making around car policy towards electric vehicles, business travel policy. We do 50% of our board meetings now virtual, of those who were before face-to-face. Greener electricity. In some places we have even moved buildings. So those are all initiatives that you can take to reduce your carbon footprint of your own operations.
Okay. And Wim, turning to investments, they play a huge part of the insurance business model. And insurers, the European insurers have something in the order of 10 trillion of assets under management, and obviously Ageas is part of that that very large investment. What is Ageas doing in terms of its ambitions on the investment side and key actions to deliver on those?
We have already for 10 years an approach where we say we exclude certain activities, like coal, for instance, or tobacco, gambling. That is not something I think a long-term responsible investor is doing. We want to integrate ESG in every investment decision we do. We want to engage. I think it's also important as the largest investor in Europe that the insurance industry is talking to the companies they're investing in. And we want to promote sustainable solutions. That is something we do already for 10 years, but since 3 years, and Gilke mentioned it, we have also sustainable KPIs at Ageas. And we had 3 for investments. The first one was to integrate ESG in every investment decision, so the integration, and to be at 100%. We're at 99.5% already. That's a Solvency II figure, so that's already very close to the 100%, so very happy about that. We also said that we wanted to invest in sustainable, let's say, assets. It means that these are investments that help, that have a positive contribution towards the transition towards a more sustainable economy. I'm thinking about renewables. I'm thinking about public transport. You just mentioned it. I'm thinking also about social housing, because it's not only the E, it's also the S. I'm talking about social housing. I'm talking about investment in hospitals, about investment in schools. And we had the target of 10 billion for end 23. We all already at right now 13 billion. So we have achieved the figure before that. And more or less, I'm happy about that. A little bit more than half of it are green investments, and a little bit less than half of it are social investments. So we have a good mix. And then our third KPI, our third ambition was to make our portfolio net zero by 2050. Of course, 2050 is still a long way. So we have said also that in 2030, we want to have a reduction of the carbon footprint of all our investments in equities, in corporates, infrastructure, and real estate with 50% for 2030. And you have to look in our annual report, and you will see that we are, let's say, on the good trajectory, on a good journey to achieve that for 2030.
Okay. A lot going on the investment side. Gilke, it's often said that realizing and even setting the same goals in underwriting is more complicated, or at least it's less mature in terms of the evolution and the tactics insurers have found to deal with that. So maybe you can let us know what Ageas is doing on the underwriting side.
Well, first of all, we are finding it very complex indeed. And there are several reasons. A first reason is the fact that there's not a uniform methodology that is applicable to the entire non-life portfolio, which makes it fairly different. And then a second reason is there is no easy solution. So we did a first measurement of our carbon footprint of our motor book. And we are now in the process of doing the same for our commercial book. And we follow the PICAF standards. And when you look at the motor book, what you see is you basically have 2 variables that you can work with, which is the type of car and the mileage. On the mileage, you could easily say, okay, we pick those who drive less, or we give an incentive, drive less, pay less, or the government puts in place better public transport and all initiatives so people use less their car. And but then a fairly different situation for the type of car, because there you see a strong correlation with the electric vehicles. The newer, less polluting cars are usually the cars of more wealthy people. It's also the cars, if you see the big pickup today on electric vehicles, it's mainly in fleets, company cars. And these will only be in the second-hand market in 3-4 years or even longer, where they become affordable and accessible for a wider audience. So the easy solution of saying, okay, we select for newer cars, electrical vehicles, and we incentivize those would actually be quite damaging in terms of social attitude. And we cannot just say, okay, we exclude all the old cars, the polluting cars, and we don't insure them anymore, because those are older people, less wealthy people who also need insurance, or maybe need even more insurance than the other categories would. So I think in conclusion, you need to go with the pace of the market and the change that you see in the local market, and it can be locally different. And then secondly, it's also not just a matter of the insurer, it's also about changing consumer behavior and collaborating with governments who actually stimulate and create solutions so a market can accelerate and transform faster. So I think that's what makes it really complex and much more than just a measurement.
There's something similar in the investment side as well. And sometimes I refer to the investment side as to the good, the bad, and the ugly. And we know what the good is. So everybody wants us to invest more and more in renewables. We know what the ugly is. It's not investing in the coal industry. But actually, the most interesting character also in the film is the ugly, because these are the industries that are not completely green, that are not completely brown. But I think, as you said, Olav, we are the biggest investor in Europe. We have to continue to invest in this part of the economy and do the engagement in order to make from these companies that are now, I would say, a little bit cocky between brown and green, to make them more and more green over time. Actually, the most polluting industry in terms of carbon footprint where we are in, for us, in terms of size and in terms of carbon footprint impact, is the electricity sector. But there will be no Tesla without an electricity sector. It's only that we continue to invest in this sector, we continue to invest in these companies, but we talk to them and we encourage them, we force them to make them greener and greener, and to make the switch from fossil towards renewables.
Well, I think this the fact that it's the focus on transition financing would probably allow us to have another webinar, and I think that's probably somewhat one we'll do in the short term. We may well ask your input on that, because I know that the whole question of how you achieve transition financing is still a very big issue, and the discussion of Scope 3 emissions and how you use that information is something we'll tackle, I'm sure, another time. Yeah. The other issue that you mentioned, and that's something that's come out of a report we did with the Global Federation of Insurance Associations on protection gaps, and on particularly on, this is all gaps, particularly on the climate gap. The key message that came out is a joint project between companies such as insurers, but the wider industry, customers, and policymakers. And I think only if everyone working will solve the problem. But despite that, and the challenges of doing concrete things now, has Ageas managed to identify targets that they can actually find meaningful and can make an impact on in terms of the underwriting?
What we decided already back in 2021 was that we would define our contribution in terms of sustainability and creating product in terms of percentage of our inflows, and I will explain. So what we said is, by end of 2024, we want 25% of our inflows, of our total inflows, to come from products that have an incentive that drives a customer towards a more sustainable behavior. And so today we are at 27%, and with still a year to go. So I would say we really made good progress. And this is 27% of our total inflows, meaning we cover life, non-life, and health. And also meaning we do not only look at climate, environmental, but also at the social. And what was really, really good to see is that by setting this target, which was invented by ourselves, but going beyond whatever regulation that existed back then and even today, as many years on, we encouraged a lot of initiatives in the businesses. Also did a hackathon to share group wide, and items came out as reduction for energy efficient homes, covering solar panels without any extra premium, earthquake insurance, prevention programs in case of flood, in case of storms, prevention programs in the health side, also on mental health, return to work programs. AG even created an own mobility ecosystem in Belgium, partnering, and quite a lot of these initiatives are with external partners who bring in the science topic or other capabilities that we don't have. Green parts, so also choosing the repair over replace is one of those initiatives. So when we repair a car after an accident, customer gets choice to go for either a recycled part over a new part, and we offer the service in the UK. But what you see also here is that you reach certain limits at 30%. We have reached 30%, but above this it becomes really difficult because you cannot replace or you cannot repair every part of the car. You have a sort of plateau, and if you look at the new cars like the Tesla cars, they have less parts, so it will become even more difficult to say, okay, let's not go for a new, let's repair. And then we tried the same in home insurance. Can we repair instead of replace? But there you see that the customer doesn't have the appetite. They want a new instead of a repaired item. So I think this has for us been the way to go broader and to make sure that in all of our offerings we think really long and hard. What can we do? So we move our customers and we nudge the behavior towards more sustainable behavior than before.
Okay. Well, that's a lot going on. And I think it's worth mentioning, of course, in Europe there's a huge political ambition and a regulatory sort of backstop to all of this. And there's a lot of regulation to provide, for example, the data that, in fact, the industry has been asking for, saying we need data to do this, and also to set transparency on what people are doing, not just the financial sector. I think it's very good. We're very happy, certainly, that this has been expanded to the whole across all sectors with the Green Deal, and also to set certain minimum requirements. But before we touch on some of those regulations, Gilke, Ageas operates across a range of geographies. So maybe I thought you could step back and take a look at what's going on in different parts of the world and maybe different approaches they're taking in terms of dealing with the sustainability challenge.
Clearly, we see that Europe is very much regulation driven. I mean, that's also what Europe says. We want to lead in regulation in this space. And if we compare to Asia, there you see that it's probably more led by business opportunity and consumer led. But we also see quite a lot of initiatives around environmental policy in Singapore, in China. And if you take into account the local reality, actually we go into the same direction and we are quite well aligned, Europe, Asia. Also, if you look at the ESG ratings of Sustainalytics and you look at the ranking, you will see that there's quite a lot of Asian groups featuring in the top charts. I would probably personally say that the gap is bigger with the US and Europe, where you see that in the US there's far from driven by policy and regulation, and it's more emphasis on innovation and more the I would say the difference is the carrot versus the stick, and in the US there's much more incentives for developing new technologies to drive climate change, but far less regulation that measures, that penalizes if you pollute. So that's my take. I don't know, Wim, whether you have anything to add or disagree.
No, I agree. I think indeed in Asia, we have some very, let's say, constructive discussions with the investment teams there, and we see that they're the same teams. I think in regulation, to answer your question, Olaf, I think it's good that we will have more data, that we will have more, I would say, comparable data, reliable data, audited data from companies. I think that will bring more coherence in the ratings we see. On the other hand, you cannot regulate everything. A sustainability rating, the sustainability analysis is about different dimensions. We said it already. It's about environment, it's about human resources, it's about the way, it's about ethics, it's about society, it's about suppliers, it's about governance. These are very different dimensions. And so the final result of whether this investment is sustainable or not will also depend on how you rate it. The different dimensions, that's a little bit subjective. So I think that part will never be regulated. People think it will be like, at the end, sustainability ratings will be like credit ratings, but credit ratings is only one dimension. Here, I think it will be more like equity recommendations, where you can have one analyst that is having a buy and another analyst exactly on the same data will have a sell. So I think it will not be possible to regulate everything. I think it's now important after this tsunami of regulation we had from Europe, they stop a little bit and that they let sink it in, that they give some time to all the actors so that we can work with it, that it can stabilize, and that, let's say, the business model can develop. Because otherwise it will be an overregulation. I think that would be very negative. And I think for the time being, and that's, I think it's a negative, a lot of people that are working on sustainability are not working in the product development, or not working on financial analysis, but are now working on how to understand this regulation, do the reporting in line with the regulation. And I have to admit, it's not the most, I would say, motivating work. So let's stop a little bit with regulation for the next couple of years. We have enough for the time being.
Okay, but maybe just touch on one part of that as well, which I think we've also highlighted, is a lack of sustainable investments. And one element to potentially fix that is the EU green bonds. Do you see a particular interest in green bonds, and LTIFs is another vehicle that's been put on the table?
Green bonds, I think it's a very interesting, I will say, mechanism. It's a little bit what you said about nudging customers. It's a little bit the way we can nudge towards companies if they have a green bond and a traditional bond. If we all, as in insurance investors, if we all go for the green bond, it's more than nudging. I think it's important. We did almost 2 billion now in green bonds, so very happy about the progress we made there as well. The LTIF, it's probably a good instrument, but actually we are not investing a lot in funds, so for the time being, no strong opinion on this, neither positive or negative.
Okay. Well, we've covered a lot about the climate side of sustainability, and maybe just before we wrap up, maybe touch on some of the other aspects, which I'm sure Ageas is also very focused on. So maybe just give a bit of an insight into what else Ageas is doing on the sustainability front.
Going back to what I said at the start, so indeed, we defined ourselves as a stakeholder-driven company, and that means that we put targets for each of our stakeholders. And so for customers, next to the ESG element in our the incentive in our products, we also have KPIs on transparency, on customer NPS and the likes. For employees, there we set targets mainly on D&I, on great place to grow, and how we train them and how we get them to new skills. We measure employee NPS. On partners,
NPS?
NPS is Net Promoter Score. So we measure actually employee engagement, but also, and there's many different drivers behind what makes an employee stay with you, but also recommend the company as a great place to work. And we do the same with partners. So we measure all different elements from the partners that we work with, whether it's distribution partners or partners that help us deliver sustainable solutions. For investors, of course, we have the financial targets, and for society, we work mainly with the ESG ratings that are quite a good summary of a lot of the non-financial targets we set ourselves. So, and for all of our stakeholders, we want to rank top quartile. So we try to benchmark ourselves with what peers are doing in that segment.
Okay. Well, thank you. We're coming towards the end of the webinar, and sustainability is a huge topic, and we'll only ever touch the surface in a time like this. But it's been very interesting to hear what Ageas is doing. And maybe just to wrap up, I can ask both of you to if you have any final comments on the ambitions and the challenges ahead for Ageas.
I would say, sustainability is such a fast-moving target that status quo, actually, you go backwards, and you go backwards really, really fast. So it's really, really important that all industries and all companies today focus on creating solutions and invest maximum amount of resources and people into this, because especially on climate time, the clock is ticking, and I personally believe we don't have until 2050.
Gilke, I think you know what I'm going to say. I think sustainability is, because I'm saying often, I think sustainability is not about perfection. Sustainability is about making progress. And we are not perfect, but I'm sure that we have made a lot of progress during the last couple of years.
Thank you very much. Wim, Gilke, thank you very much. And to our audience, thank you for joining us.